Welcome to the daily brief, where I'll go over the highlights in the market for Friday, September 23rd, and then quickly look to see how things look for Monday, September 26th. And we had another negative day, pretty negative overall, but we're starting to see a convergence of a lot of negative things all happening at the same time. And additionally, we're hitting support with the S&P 500. Now, we don't know. Are we going to bounce up off of that and get some support? That could happen. We're seeing some positive indications of late day buying by the smart money. That's continuing. So we want to watch for that, but we're not really seeing any confirmation right now based on price. We want to see especially how Monday opens and then how Monday closes to see if we're going to see any kind of a bounce to turn things a little bit more positive. So let's go back and talk about what happened. We gapped lower below S1 at 37.41, and we just blew that in the dust. We went down below S2 at 37.25. Prices eventually fell below S3. We don't hit that level very often at 36.38. As the day went on, we almost got down to S4. Not quite, but we still kept falling. We broke the June low for a little bit, but then we're able to close back above that. And that can be seen as positive for right now. Now, Monday, that could all go flying out the window. But for right now, the fact that that support has held is something positive to hang on to. Going into the close, we saw some more late day buying again. And this is a pattern. Take out the Fed days. The day that the Fed came out and announced the rate hikes, that day was crazy. But the other days, we've been seeing early weakness and then late day strength, even when we have down days. And that can be seen as positive. And that ended up taking us back above S3 in Friday's session. But we still ended up being down 1.72%. Volume was above average. And the technicals, they're negative overall, but they're showing some real extreme negative readings. And the short-term, intermediate term, and even a couple of long-term charts are starting to look extreme negative. We still have this real fixation with inflation and interest rates. There are geopolitical concerns too with Russia, Ukraine, and that you have to be careful because that could always escalate and come to the forefront at any time, as could any other concern that we are kind of keeping an eye on these days. So what are some comments that we can make? We're seeing interest rates really going up in a high inflationary environment, and that's producing a lot of headwinds for stocks right now. The Dow actually closed below the June low. The S&P came down to that level and then was well above that by the time we closed the session. A lot of the negative vibe that drifted over into the US session came from the UK, where they're deciding to have tax cuts. And this is the first time since 1972 that they've done that. They're trying to do that for economic growth or stimulation. And then the 10-year gilt, that's their 10-year bond over there, it was up to 3.85% as people started to realize, oh, wait a minute, they're going to finance this growth or this stimulus by issuing more debt. At the same time, they're raising interest rates. Maybe that's not a real good thing after all. And then also there were attempts and concerns to spur stronger growth while these interest or these inflation rates remain very elevated. And that's a real concern, not only in the US, but we're seeing that globally. Then the British pound really sank. And I don't track that as much. But it's really coming down. It's down to 1.08 if you round up, 1.09. The first time I went to England, it was at about 1.2 to the dollar. Second time I went, it was 1.5 to the dollar. So to have it come down to 1.8 or 1.9 is showing how the dollar is really going up as other currencies like the British pound and the euro are really going down. And the dollar was up over 112, almost to 113 in Friday's session for the index. And then Goldman Sachs, they originally were coming out saying, we think the S&P will be about 4,300 by the end of the year. They're not saying that now. They're saying it's probably going to be closer to 3,600 by the end of the year. And they also suggest that we might fall to 3,150. And as the Fed is trying to do this, they're trying to achieve what's called a soft landing, where you top out with interest rates and actually start cutting them without economic growth really suffering. And that's a pretty hard thing to do, as complicated as the US economy is. And when that doesn't happen, then that's called a hard landing. Then all of the sectors in the S&P were ended up down. The transports hit another 52-week low, but we're having the Dow start to confirm that now. It's actually dropping as well on the Dow theory chart. Stocks are really oversold right now, especially short term, and a lot of our intermediate term indicators and even a few of our long term indicators are showing oversold conditions at support. So if the market's going to make a stand, it would be right at about where we're at right now. If it's really just going to fall apart and just turn into a mess, even a bigger mess than it already is, all of these things won't really seem to matter. So the next couple of days could be rather critical. The 30 to the 5, the 10 to the 2, the 10 to the 5, those yield curves are still inverted. Sentiment is starting. That's also potentially positive. They're starting to have a lot of people afraid at the same time. We're getting more over to the extreme fear category. The only report that came out was the IHS market manufacturing and services, not a real market moving indicator or economic report. The manufacturing came in at 51.8, where that was up a little bit from 51.5. And the services PMI reading was the same as the previous month. Our trend is negative and the ADX is starting to climb as we're seeing these down days. So we are in a negative trend. With the down day, our bias is negative, and the last number of days have been negative, so our momentum is also negative. So what's our outlook? We're negative, and you can't dispute that based on all the charts that we see. And we might still go more from here. Just because we're oversold doesn't necessarily mean we can't fall more, but we're also at a support level or near a support level. So if we can get all of those things to come together, it might end up being positive for the market. We don't have any economic reports coming out on Monday. And then we have the whole geopolitical spectrum of things. Really, it's what's happening in the US market and what's happening as far as inflation and interest rates. But we have to be aware there's been some rhetoric between Russia and Ukraine and that whole situation. And we have a couple of days over the weekend where, who knows, something might end up happening, and that could be pushed to the top is what the markets are really fixated on. So our scenarios, we pretty much have to go with the down scenario, but we're so oversold, it's not a real enticing place to go short at this point. We can't go with the positive side because we're just not getting any indications that things are good. Everything is pretty much pointing down right now, but that we might be at support while we're oversold and sentiment is starting to get extreme fearful. We can't go sideways right now because the ADX is above 20 and the red line's on top, so it's negative. And I apologize if you hear any background noise. So our conclusion then is the S&P is negative right now. Short term, it's negative but oversold, as it is for the intermediate term. And even some long-term indications are oversold, but we're still strongly negative in that regard. So thank you. Please feel free to watch the full-length video to look at the charts, to see some of the reasoning that I'm putting into why the next couple of days could be so important. And I will also be posting the weekly video as well as the intermarket analysis video.